Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. How are you everyone? Hope you are doing good. Okay, welcome back to MOC IMU 600 Islamic Capital Market. So Alhamdulillah, if you reach this video, this will be the last topic that will be discussed in IMU 600. So today we are going to discuss on the topic Islamic structured product. So this is the outline of our topic today. We will go through the definition of structured investment product, Islamic structured investment product, structuring Islamic SIP, principle in structuring Islamic SIPs, types of Islamic SIPs, and underlying contract model of Islamic SIPs. So we will go through all of this together. Okay, guys, now we move to the definition of structured investment product. So we have a multiple definition of structured product. So this one that we will discuss this definition that I have highlighted in this slide. So this is among the definition that we have in the literature on discussing the definition of structured investment product. So the first one is defined, all right, structured investment product. SIP is defined as an investment instrument, especially created to meet a specific need that cannot be met by the standardized financial instrument available in the market. Okay, so by the term itself, so it can be seen in the topic, or it can be seen in the title of the instrument itself. It is a structured. Okay, it is a structured. So we have a variety of product in the market. Okay, we have unit trust, we have stock, we have sukuk. Okay, however, this structured investment is created to meet the specific needs that cannot be met by the standardized financial instrument available in the market. So we have demand from the investor that want this structured investment that is tailor-made to fulfill the needs of the investor, and also all the institutions that require this investment. And we have the US Security and Exchange Commission define structured security as security whose characteristic of cash flow rely upon one or more indices, or that have embedded forward option or securities where a return to the investor and payment obligation of the issuer are contingent upon or highly sensitive to changes in the value of underlying asset, indices, interest rate, or cash flow. So this one will be a quite complicated. It's more deeper meaning on the structured investment, because you can say that we have the element of forward in the structured investment. We have the element of securities. We have the element of indices. So this is what structured investment about. And then we going to the authority definition. We have Securities Commission. Okay, what SC define Islamic structured investment product. Okay, based on the guideline on the offering of structured product 2007. Structured product means any investment product that fall within the definition of, okay, is related to the definition of securities, which under the Securities Commission Act, and which securities, all right, securities derive its value by reference to the price of or value of an underlying reference. So what is it mean by the underlying reference? It means that any security, index, currency, commodity, or other asset or reference or combination of such asset or reference. So that will be the definition of Securities Commission. And then this one that I like this definition because it is very simple and very easy to understand. Okay, what can we summarize from that? That a structured investment product is a pre-packaged investment, all right, strategy which is based on derivative, okay, consists of future forward option, but which future protection or principal. So the two common element in a structured product, a bond product or another element of capital safeguard, and also we have alpha generator, which is in any financial instrument, for example, stock, currency, and others. So as you can see in the picture here, we have initial investment. Let's say this is the initial investment that been invested by the investor. Okay, for example, this would be a 10,000. Okay, so the 10,000 will be divided into two, which is capital conservation and also potential return. So that's why, okay, it can be divided into two common element, which is a bond product or any another element of capital safeguard would be in this category, and potential return would be this category, which is financial instrument alpha generator, which this one is much more riskier. Okay, however, this capital conservation is the characteristic would be more for capital protection, more low risky. Okay, that will protect the investment capital. Okay, so basically you have to understand, and also you have to remember that structured investment will divide the investment capital into two. The first one will be the for capital protection, and the second one is invest with the intention to get the potential return from the proceed investment after that. All right. So this is the future of common SIP, and I think that this one will be easy also to you to understand. Okay, you will be more understand by understanding the future, the characteristic of common SIP. So what is the characteristic? SIP are structured investment product that have no resemblance or any particular asset or any standardized financial instrument. Okay, SIP combine two or more financial instrument, one with which is generally in the form of derivative, to create single structured and packaged product. In the other words, SIP involves securities embedded with derivative instrument. So where in this category, so where in this category would consider as a derivative instrument. So derivative usually will be in this category, which is potential return, because derivative is instrument with high risk that offer investor with high return. Okay, so it is in the form of derivative. All right, and then the return of SIP are linked to the performance of an underlying asset or benchmark, such as interest rate, equity market, commodities, corporate credit, foreign exchange market, real estate, and other financial instruments. Okay, and then some SIP offer capital protection features, or some or all capital should certain requirement be satisfied. Other SIP, beside offering capital protection if held to maturity, also offer minimum guarantee on the performance of the investment. So in a conventional SIP, it will offer the investor to have a capital guarantee or the capital protection toward the investment capital. This one, this category, the lower category. For example, a bond, because bond will give a fixed income toward the investor. And then some SIP, beside offering potential return, also offer hedging mechanism like dual currency structure product. Okay, so we have the conventional SIP and also we have Islamic SIP. So we have to bear in mind that in Islamic finance, we cannot guarantee any capital. Okay, based on the concept of investment in Islam, okay, it is prohibited to guarantee a profit, to guarantee a capital in investment. Okay, so this is the structure of Islamic SIP, where it must come with this criteria to ensure the SIP is Islamic and Sharia compliant. So what is the first part? Is underlying asset in Islamic SIP should be Sharia compliant. So we know that SIP is will be based. Okay, if you look to the definition, we know that SIP will depend on the underlying asset. For example, indices, okay, credit, currency. So based on Islamic SIP, the underlying asset should be a Sharia compliant asset. Okay, so for example, for indices, we should choose the Islamic indices. All right. For example, any commodities. Okay, we will select the Sharia compliant commodities to be the underlying asset. And then Islamic SIP should be established using contract and principle that do not contravene Sharia principle. So this one is quite important because we know that, as I mentioned earlier, we cannot guarantee a capital. Okay, capital protection is not Sharia compliant. Therefore, we have Sharia contract. Okay, in Islamic finance, for example, we have Urbun, we have Wa'ad, we have Tawaruk, that all this contract will be fully utilized to replicate the conventional SIP. All right. Okay, to make it, because the result of the Islamic SIP, in the economic result, for example, is quite similar to the conventional SIP as well. Okay. And the last one, relationship between the investor, issuer, manager must be clearly defined in accordance with the underlying contract and principle apply. So because later on we will show you how it been done. Okay, where is the relationship is about, because we have the between the investor and also the issuer to the investment, we have the underlying Sharia contract that must be fulfilled by the one who conduct this Islamic SIP. Okay, so far so good, guys. I hope you are good. Okay, so this one is the general structure of SIP, which is consists of investor, issuer or the manager, and also the proceed allocation portfolio. So for this structure, we can analyze that we have the issuer, okay, that sell the SIP. Okay, they sell the instrument, structured investment product to the investor. So investor will give their money, their funding, okay, will give their investment capital to the issuer. So for this category, for this part, we have the element or the underlying contract that been used in this category is wakalah or mudharabah. Okay, so wakalah because issuer will act on behalf of the investor. However, mudharabah is a partnership where one person will give a capital and the second person is actually the one who have a skill to invest. So in this case, investor will be the one who give a capital and issuer or the manager will be the one who invests, who using the expertise to invest in the SIP. And after that, okay, still remember the structure in the earlier slide that I have mentioned to you. Okay, for example, that we have 100% of total investment cost, 100%. So we will be divided into two, which is the first 10% will be allocated to the profit maximization portfolio. And the 90% will be allocated to the capital protected investment portfolio. So basically, this capital protected portfolio is related to the product of suku, Islamic fixed income, or Islamic money market. Okay, and also this one, profit maximization portfolio, consists of product which is option, derivative, okay, and it employ the contract of Urbun or Wa'ad. And the purpose of 10% to be invest in this area is to have to maximize the profit, okay, to optimize the profit. And the purpose of capital protected investment portfolio is to protect the investment, okay, even if the profit maximization portfolio is cannot be success or fail, or we can say as having losses. Okay, so capital protected investment portfolio with the investment fixed income investment here will cover the losses that we have in this area, in the profit maximization portfolio area. Okay, so basically it divided into two, 10% for profit maximization, 90% for capital protected. So this is the example lah. All right, it can be 60-40 ke 70-30 can also. All right, so this profit maximization is to maximize the return, to optimize the return in the instrument where can generate more return. For example, derivative, currency, commodities as well. Okay, and the Sharia contract being used is a Urbun, okay, because Urbun is similar to the call option, and then Wa'ad as well. Okay, and this one will be in term of fixed income or money market. All right. So this is the explanation for the structure before. So you can always read for this. Okay, next we move to the types of Islamic SIP. Okay, so we have a few types of Islamic SIP. For example, the first one is called equity linked note. So this one is quite familiar in this structured investment. So ELN, the short form for equity linked note, is a type SIP with a return tied to the performance of underlying equity, which can be a single stock, a basket of stock, or equity index. All right, it can be structured as a combination of a fixed return investment and equity option. Most ELN are sold over the counter, which is not over the exchange. It is over the counter, is a tailor-made between parties, two parties, three parties. Okay, may not offer in the secondary market trading. That are designed to be kept until maturity. However, the issuer or the arranger of the notes may offer to buy back the notes or provide limited tradability to the investor. Okay, two requirements to be observed. The first one is the underlying equity must be Sharia compliant. Okay, and then the concept of an option may be structured using Urbun or Wa'ad. All right, so these two concepts is to ensure Sharia compliant of the Islamic SIP. And the next one, we have types of interest rate linked notes, where this is the capital protected instrument where the interest and additional return linked to the performance of the underlying interest rate index. Okay, the return is based on the movement in a specific interest rate index, such as in LIBOR, okay, London Interbank Offering Rate. These are particularly good for investors who seek the potential of an increased yield with some credit protection. And thirdly, we have FX linked note, foreign exchange, fixed income return, where the coupon or maturity payment is tied to the performance of underlying, which may be a single foreign currency, a basket of foreign currency, or foreign exchange future, okay, FX future. Okay, so this one is linked to the foreign exchange and related to the currency. And then we have a commodity linked notes. So these types will deal with the commodity, where the return is tied to the performance of the commodity or a basket of commodity over a certain period. On the maturity date, investor will get the initial principal amount plus a return, if any, based on the percentage of change in the underlying commodity. And also in Islamic SIP, the commodity must be a Sharia compliant one. Okay. Okay, so this is the underlying contract and model for Islamic SIP. So as you can see, this is the model. The previous model is the same from the previous one that I have showed to you. However, this one is I want to highlight, okay, what is the underlying Sharia contract that happened between the issuer, investor, and the proceed stage. Proceed stage means they proceed to the investment. Okay, between issuer and manager, we have the wakalah contract. Okay, because issuer will receive their wakalah fee. Okay, will receive their wakalah. Investor will pay for the wakalah fee, and issuer is entitled to receive the fee and as their profit as well lah. And then we also have a mudarabah, okay, where both parties will be a partner and investor is the one who give a funding to give a capital, and issuer is the one who expert in this area and will do the investment process. Okay, in the proceed stage, where the second stage here, okay, this is the one where we are using a multiple also Sharia contract. For example, Inah, Urbun, Tawaruk, Murabahah, okay, and few more. Okay, usually in this profit maximization portfolio is using Urbun, okay, to replicate the concept of call option. And also in the context of capital protected investment portfolio, okay, we have the concept of Tawaruk, we have the concept of Inah. Okay. So this one is the Urbun model. Okay, as you can see here, we have number 1 until number 5. Oh, sorry, number 4. Okay, so you can go through one by one. So the first one is based on the concept of wakalah bistismar or mudarabah. It's quite similar to each other actually. So investor place the proceed with the issuer and appoint the issuer as agent or investment to manage the proceed in Islamic SIP. And then we have number 2, investment into Islamic fixed income instrument, where it take about 90% of the proceed Islamic fixed instrument with 100% capital protection, which means will give you 100% capital protection, which involve potentially investment into community murabahah transaction or tawaruk. Okay, and then the issuer invests in the remaining 10% of the proceed by entering into Urbun contract to purchase certain Sharia compliant underlying asset. The Urbun issuer pay 10% of the purchase price as earnest money. So this is the definition of Urbun. If the issuer decide to continue with the transaction later, Urbun will be considered part of the price. Hence, the issuer will have to pay only the remaining purchase price, original purchase price minus the Urbun price. Okay. However, should the issuer decide not to continue with the investment at the maturity date, Urbun is forfeit. It's not refundable. Okay, that is the concept of Urbun. The decision on whether to proceed with the investment depends on the performance of underlying investment at the time, because we have the underlying investment at the time that we want to proceed or not to proceed. Okay, we depend on the performance. If the performance is positive, the issuer will continue with the contract, making profit on the investment. Otherwise, transaction will be cancelled. The issuer will lose the Urbun amount. So it's the combination of Urbun. The concept of Urbun is quite similar to deposit. However, it have a certain difference between deposit and also Urbun. Okay, and is similar to the call option. Lampu tiba-tiba hilang. Okay, tak apa, you can still see me, kan? Okay, so in this Urbun, is a combination with Urbun and also the underlying investment. And number 4, at maturity, the issuer will pay back the amount of investment which has been protected via fixed income instrument to the investor together with profit. Okay, hence SIP or redeem. So we must ensure that Islamic fixed income here actually is ready to cover if any losses happen in the Urbun part. All right. The next one, we have a wide model. So wide model is quite familiar. So the first one is investor place the proceed with issuer and appoint the issuer to manage proceed in Islamic SIP using the concept mudarabah muqayyadah, restricted mudarabah, which is we have identified what to do with the capital. Therefore, it is a muqayyadah. And then the issuer invests 90% of the proceed in the Islamic fixed income instrument in the form of negotiable Islamic debt certificate and IDC with 100% capital protection. Okay, number 2 here. And then the issuer enter into the unconditional irrevocable purchase undertaking wa'ad. Okay, promise to purchase the Islamic asset in the form of copper and wheat using the remaining 10% of the proceeds at a certain sale price upon maturity. Okay, so this one. And number 4, if the one is exercised, okay, it's been implemented, the issuer will get the return from the performance of the underlying asset to be distributed to the investor. And number 5, any profit will be shared between the issuer and the investor according to the ratio agreed upfront. However, the financial loss is borne by the investor, except the loss is a result of the misconduct, negligence, or breach of term of the issuer. Because at the first place, this is the mudarabah contract. So that's why it must be borne by the investor. So I think that's all for now. So basically, we have covered on the Islamic structured product, and this is all the main and also fundamental model that we have to know in order to understand Islamic structured product. I think that's all for now, and inshallah we'll meet again in the next topic or in the next subject, inshallah. So I hope that you gain something from this topic and you gain something from this MOOC, and it will benefit you in your life, maybe your career perhaps, or maybe will be beneficial for you if you enter the industry. So I think that's all for now. Thank you for your participation. Thank you for your attention. If you have any question related to this topic, please drop your question in the comment section. That's all for now. Thank you. Assalamualaikum warahmatullahi wabarakatuh.